I've been investing for more than 20 years. Over that time, I've bought mutual funds, dividend stocks, penny stocks, growth stocks, index funds, ETFs, and I've even traded stock options. All that experience has taught me firsthand what works, what doesn't, and the optimal way for me to invest my money. In this video, I'll break down my full investing plan for 2025, and I'll do so in 3 parts. First, I'll show you my investing goals and overarching strategy. Second, I'll go through every type of asset that I own. And then finally, I'll break down my full asset allocation plan, including some of my top investing holdings. Hi, my name is Brian Ferraldi. I'm a financial educator with 20 years of business analysis and investing experience. Let's start by talking about my overall investing goals and strategy. To do so, I think there's 5 key questions that every investor needs to answer for themselves. The first question to answer is, what is your investing goal? And on that front, I think there's several different things that an investor could be trying to go after. They could be going for capital preservation, generating income, paying for a big upcoming expense, wealth accumulation, paying for retirement, or my favorite, trying to reach financial independence. Now, for me personally, I'm trying to go after 2 things in particular. The first is this general wealth accumulation, and I'm trying to accumulate enough wealth so that I can reach financial independence. So that is what I am personally targeting. Next question to ask yourself is, what is your time horizon as measured in years? Is it less than a year? Is it 3 to 5 years? Is it 10 years or more? In my case, I have a very long-term investing strategy. So my investing time horizon is 10 plus years. The next question to ask yourself is, what is your risk capacity? What is your individual ability to deal with volatility in the markets? Are you a conservative investor who needs low volatility, or are you an aggressive investor that can deal with high volatility? For me personally, I used to be exclusively an aggressive investor that could deal with very high levels of volatility. More recently, I've decided to pare that back and to make more of my investments in medium risk assets. The next investing question to ask yourself is, what type of account are you going to invest in? You're going to invest in a taxable brokerage account, or in the US, are you going to use tax advantage accounts like a 401k, IRA, or Roth IRA? In my personal case, I actually take advantage of all 4 of these accounts, and I have both taxable and tax advantage assets. And then finally, within your investments is your general strategy to be an active manager of your portfolio or a passive manager of your portfolio. In my case, I actually choose to pursue both. I'm active with my taxable accounts and I'm passive with my tax advantaged accounts. Now that you understand my goal and general strategy, let's cover the types of investments that I personally own. And those break down into 4 general buckets. Bucket number 1 is individual stocks. And as we'll see in part 3, this is actually where the lion's share of my assets currently are. Now, if you're unfamiliar with what stocks are, stocks simply represent ownership in a company. And historically speaking, they are a risky asset because they are more volatile. But as a counterbalance, you also get much higher return potential with stocks than you do with other assets. In fact, this great chart from the wonderful book, Stocks for the Long Run by Jeremy Siegel, shows that over the last 220 years, stocks have been the best performing asset class in the United States by a country mile. This is the reason that I have the vast majority of my wealth in the US stock market, simply because it is the best performing asset class. Now, just because you own stocks doesn't mean that you can't make an income from them. Some stocks do pay dividends, and generally speaking, stocks are a great choice for growth-oriented investors. Historically speaking, stocks have also dramatically outpaced inflation. In fact, they're one of the best performing assets to own during inflationary periods, and they're also highly liquid. So these benefits are the key reason why most of my assets are held in stocks. The second major asset class that I own are stock funds. Now, when we talk about stock funds, there's 3 general categories of funds. There are mutual funds, which is our pools of money that's managed by a professional investor. There are index funds, which are funds that track market indexes. And then there are exchange-traded funds, or ETFs. And those are collections of securities that trade on an open exchange. Now, if you're unfamiliar with the differences between these 3 types of funds, you can feel free to pause the video or click the link in the video description to download a free copy of this slide. Given the pros and cons of these, I personally choose to invest in index funds and a little bit of exchange-traded funds as the passive portion of my portfolio, given that their expense ratios are so low and their long-term performance is, generally speaking, market matching. The third major asset class that I own is real estate. Now, this is not a major asset class for me. I'm not much of a real estate investor, but I do include in this the equity that I have in my primary residence. I do own my own home, And I also have some real estate investment trust stocks in my portfolio, and I could see increasing my allocation to this real estate category over time. The final major asset category that I own is simply cash. Now, I consider cash to be the money I have both in my savings and checkings account, as well as the cash that I keep in my brokerage account. Now, cash provides investors like me with two main things. The first is extremely low volatility. The price of cash does not move much at all. And secondly, cash provides optionality. You can do lots of things with cash, especially when the market is crashing. So I view that cash as future optionality for myself as opposed to a return generating mechanism. Now, the downside to holding a lot of cash is this word, inflation, which is something that the world has seen a lot of in the last couple of years. However, inflation is far from a recent phenomenon. This chart here, which comes from the St. Louis Fed, shows the purchasing power of $1 pegged back to 1913, which was when the Federal Reserve was created. Believe it or not, but the purchasing power of the dollar has fallen dramatically over the last 100+ years, so much so that that same dollar only has 3 cents worth of equivalent purchasing power today. That's a 97% drop in purchasing power over just the last 100+ years. Now, as of November of 2024, here are the most recent inflation rates that are reported according to tradingeconomics.com. So if the cash that you are holding is not earning at least this much interest in the account that it's being held in, you are losing purchasing power over time. And it's for that reason that I am thrilled that the sponsor of today's video is Public.com. When I have cash I'm not ready to invest or I'm saving for a larger purchase, I like to keep it in a high yield cash account that pays me with interest to wait until I'm ready. That's why I'm thrilled to partner with Public.com on this video. Public.com is a platform where you can open a high yield cash account, invest in stocks, ETFs, and bonds all in one place. With Public.com's high yield cash account, you can earn an impressive 4.6% APY on your cash. That rate is 10 times higher than the average savings account. Plus, with Public.com, there are no subscription fees, no account maintenance fees, no balance fees, and there are no limits on how much you can earn. And you can transfer, withdraw, or invest your cash at any time, whenever you'd like. If you want to put your idle cash to work, open up a high yield cash account on Public.com by visiting public.com/Brian or by clicking the link in the video description. Now that we know the types of investments I own, let's move on to my specific asset allocation plan. Now, I'm a firm believer that your asset allocation plan should gyrate depending on your time horizon. As a general statement, the longer your time horizon, the riskier you can be, and the lower your time horizon, the more conservative you need to be. Because my time horizon is 10+ years, I'm okay with holding a little bit of cash, basically no bonds whatsoever, and having the majority of my capital invested in the stock market. So with that, here is my current asset allocation plan by category. Now, let's dive a little bit deeper into each of these, starting with my smallest allocation, which is to cash. I currently have about 14% of my assets in cash, which for me is actually a very high number. Now, why is my cash allocation currently so high as of December of 2024? Well, it's in part due to the fact that equity valuations are currently pretty high. This wonderful slide, which comes from JP Morgan Asset Management, shows the S&P 500's forward price to earnings ratio. As of October 31st, 2024, this number was about 21.26. As you can see, that's more than one standard deviation above its 30-year average of about 17. Now, the other two times in recent history when this number was above one standard deviation above its long-term average was late 2020 and into 2022, right before the big fall, and in 98 to 2002. During both periods, equity markets faced a pretty large correction. Now, to be clear, I'm not saying that I expect a correction to happen in 2025. I don't believe in making macro calls like that. Given where equity valuations are today, I do think it's prudent to have a higher than average cash balance. When you combine with that geopolitical stuff, such as the wars in Ukraine and Israel, as well as the fact that we have a new president coming into the US who wants to make some pretty big changes, I see more reasons to be cautious as we head into 2025 than I do to be extremely bullish. So that's why I currently have a higher than average cash balance. Now, my real estate balance, which includes the equity in my primary home as well as those real estate investment trusts, is currently about 16%. There's really not much to say here. I live in my home and I do do have a little bit of exposure to equities through my portfolio, but this isn't a major area of focus of mine. Next is my tax advantage accounts, which I have about 19% of my total assets in. And for me, this includes my 401k, my IRA, and my Roth IRA. Now, for simplicity, the funds that I have in these accounts is simply invested in broad-based index funds, the majority of which is in the Vanguard Total Stock Market Index Fund, which ticker symbol is VTSAX. It has an extremely low expense ratio, and it's one of the largest index funds in the entire world with $1.7 trillion in total assets. Beyond that, I did opt for some additional international exposure, so I added on to that the Vanguard Total International Stock Index, VTIAX, as well as the Vanguard Emerging Market Stock Index, VEMAX. Although my allocation to those international index is not as high as it is to this total stock market index. This makes the retirement portion of my portfolio essentially hands-off. Now that brings us to the taxable portion of my portfolio, which is entirely held in individual stocks. Now, to give you some numbers behind my stock portfolio, I currently hold about 37 positions in total, some of those which are teeny tiny and I held on behalf of my kids. My average position size is about 2.7%, and my largest position is actually in a company called Mercado Libre, ticker symbol MELI. Now, over time, my best performing stock has been Netflix. I've gained over 5,000% on my initial purchases of it. Now, my longest held position is Google, which I first purchased in 2008 and still own today. So I'm on year 16 of holding that. Now, my portfolio, despite having 37 total positions, is fairly concentrated. My top 10 positions account for about 59% of my total portfolio. And over time, my 10-year returns have been quite pleasing, 15.6% compound rate, which outpaces the S&P 500 and even the NASDAQ. This picture, which comes directly from my broker, shows my portfolio, which is the blue line, compared to the S&P 500, the orange line, and the total stock market index, which is the green line there. And as you can see, despite having a very ugly 2022, my overall portfolio has outperformed the broad-based indices. Now, in regards to what stocks are in my portfolio, I'm actually not going to cover all of the stocks that I do hold, but I will cover my top holdings just so you can get a better picture of what I understand. If there's interest, maybe I'll do a video that covers each stock that I hold in more detail. But if we look at just my top holdings, my number 1 position is Mercado Libre. My number 2 position is Tesla. My number 3 position is MasterCard. Number 4 is Meta, aka Facebook. 5 is Netflix. 6 is Google. And 7 is Amazon. Now, you might be curious as to why these stocks are the largest holdings that I have. And the reason for that largely is that these are some of the longest stocks that I've held. For example, I first bought Mercado Libre in 2012, first bought Tesla in 2012, first bought MasterCards in 2013, and so on. So the reason these companies are the largest positions that I have is simply because they have been fabulous investments that I bought more than a decade ago. And if you look at the returns from these stocks over the last 10 years, the worst performing stock of these top holdings that I have has been Google, which has only returned 491% for investors. The best performer over this particular time period has actually been Tesla at over 1,800%. Now, don't take this to mean that I only buy winning stocks. That's absolutely not true. In those smaller stocks that I hold, there are plenty of losers that I have. But what I love about doing about this analysis is that my top holdings I've all owned for more than 10 years. And it just shows the power of buying great companies and then holding them for long periods of time. If you can get just a handful of wonderful businesses like this into your portfolio, it will provide you with all the returns that you need as an investor. That is my current asset allocation plan as we head into 2025. And depending on where markets go, I could see my cash position rising over time if equities continue to outperform, or I could see it falling over time if we do get some weakness in the market. Now, I hope that this video was useful. If you want a copy of some of the key slides that I covered in this video, simply visit longtermmindset.co/slides or click the link in the video description, and I will email you a copy of some of the key slides that you saw in here. Well, thanks so much for watching this video. If it was useful, please give it the thumbs up. That really helps us out on YouTube. And if you want to continue learning from here, I highly recommend you watch this video next.